What is going on, everybody? Welcome to another rapid review. Appreciate everybody joining live, and if you are watching the replay, appreciate you watching the replay. As always, chat is open on YouTube and on X. Questions, comments, agree, disagree, stocks you want us to look at later on, just throw it in the comments, and yeah, we'll take care of that. Other than that, without further ado, let's get ready for another week of trading. All right, so as always, there's the disclaimer. You guys know the deal. Informational purposes only, education, you know the deal. All right, current state of the market direction. We are in an uptrend. Power trend is on. It has actually been 100 trading days since we got the follow through day. So happy 100 days of a confirmed uptrend. In terms of distribution days, we're sitting at 7 distribution days on the S&P, 5 distribution days on the NASDAQ. Yes, I know IBD is probably showing 6. So when we go over to distribution day tracker, this dark day right here on the S&P, it was hit or miss. A lot of different volume sources were showing above volume from the prior day or less volume from the prior day. I erred to the cautious side, counted the distribution days. That gave us 7. IBD did not. So take with that what you may. But other than that, the S&P lost the 8.5 distribution day, as well as the NASDAQ losing the same 8.5 distribution day. That was due to time 25 trading days since the distribution day. On Wednesday, which was the same day that we lost this day, we also gained a stalling day on both indexes, which was the 10th down here. Now for the S&P, that meant that we added to the count. So we lost 1, gained 1, which is what kept us at 7 for the week. For the NASDAQ, if you remember last week, we were at 6. So what this did was actually dropped a distribution day. So we lost that 8.5 day. But because we gained a stalling day, and as per market school rules, you can't have the equal number of regular distribution days and stalling days. The 9-10 day does not count to the count. If we get more distribution than stalling, where we would have 1 more day, if we count this stalling day, then this will get added. So that's why we're at 5 here and why we're at 7 here. Pretty much a breakdown. Now looking into next week, in terms of what we could see drop off, very likely that we are going to see, definitely likely we're going to see these 8-11 days drop off due to time. And you will also see this 8-13 day on the NASDAQ drop off due to time. Now, that is going to bring us to basically losing days in terms of actual price movement. You can see that there is a chance that if we could lose that September 2nd day pretty easily, just 0.96% up in next week, and the NASDAQ will drop off this day, which would be positive. But the thing is, if we do drop this day, that will actually activate this 9-10 distribution day. So a lot of stuff going on. Look, to summarize it, on the NASDAQ, we're at like that moderate high distribution, and the S&P, we're moderate high to high distribution. Secondary indicator for me, when we go through the charts, that's going to be a lot more important to me, price action there. But still, something to take note of, especially for all you IBD traders out there. All right, let's go over to the current state of the market in terms of what happened this week. The S&P was up 1.59%, NASDAQ up 2.03%. and the Dow up 0.95%. So NASDAQ leads out again. Seems like week after week, the NASDAQ, even when it looks like it might start lagging, ends up coming through and leading away. And that's why we're looking at the year with the S&P up 11.95% second place, NASDAQ up 14.66% in first place, and the Dow, as usual, third place, 7.73%. Jumping over to the moving averages, we're green on all moving averages, super positive. Not too far off the 50-day. I'll talk about that a little bit later when we talk about kind of exposure levels. We are starting to get a little bit further extended off the 10-day. Nothing insane, but just starting to see us pull away from the 10-day. Overall, everything's super positive on the moving averages. All right, so that being said, let's jump over and take a look at what's going on with the indexes. One of the things I wanted to say, in terms of just doing this every single week in general. And I thought of this kind of analogy as a surfer. Um, our job as trend following traders is to ride the wave of stocks. We're not looking to pick the bottom. We're not looking to pick the top. We're just looking to catch that wave and continue to ride it until the ride runs out. Now, one of the things a surfer does not do is you don't paddle out if there is a forecast for flat waters. And that's what this market is. The market is the forecast for us. The market is telling us, should we expect the environment that we're going to be paddling out into favorable for us catching this wave and riding waves of stocks? That's exactly what we're trying to do right here. So looking at the forecast to see what we're looking at going into next week, let's look at what has happened this week. So on last week, you could see was where we on the daily right here. All right. So this was not this past Friday, 2 Fridays ago. You could see that we attempted to make a all-time high. We reversed, had some support over at the 10-day, and basically closed flat for the day. Now, this was one of those moments, and we kind of talked about it last week. It was positive to see support. It was negative to see the rejection, and kind of like, let's see how the market reacts type of feel. And as you can see, the market reacted by being up 5 days in a row. The volume kind of picked up throughout the rest of the week. So very, very positive reaction to how we kind of ended off, basically finishing off a week ago, seeing that clear support at the 10-day, very, very positive action. And then just the idea that we climbed, made all-time highs. And you can see the volume kind of did pick up through the week. We even had Thursday with above average volume as we closed up 0.72% for the day. So positive action to see how we reacted closing off last week. Let's take a look at the weekly. So weekly, positive to see here too, right? All-time highs, closing near the high. Can't really reference last week because we did have the holiday, so that brought us on lower volume. But compared to just the average volume, you can see we had above average volume on the week. So good to see from a weekly perspective, breaking out to those all-time highs, breaking out of what was a lot of sideways action for almost a month, going back to August 13th, where we were just chopping around, going sideways, dipping below the moving averages, then above the moving averages, a lot of rotation and chop in the market to see us go through what is essentially a base in the overall index as a breakout to all-time highs with above average volume. Very, very, very positive to see that. So now let's talk about key levels going into next week. On the upside, it's very simple, just continuing to make those all-time highs. On the down, actually, one of the things I do want to mention, because we did have 5 up days in a row, it is likely that we are not going to continue to just keep going up and up and up, right? Pullback is definitely to this 10-day. As you can see, we've pulled off of it, is something that we can at least expect. We haven't had a longer than a 5-day streak since August of last year. Most of these streaks we've had are around 4 or 5 days. So keep that in just mind. Doesn't mean it won't happen, but just for the overall context of how the market acts, it doesn't go up completely with no kind of pullbacks or at least down days or sideways action. Speaking of down days, sideways action, let's look to the downside. The first level, can we stay above this prior high, this 813 high that I have marked here? It says all-time highs. It's prior high at this point right now, but can we stay above that level? Then from there, you got your 10, your 21, and your 50. And what I like is that this 50 is above this prior low right here, which is a positive sign to have another level before we dip lower low. And then from there, you can see the 9.2, the 8.20, the 8.1 lows all underneath there. So as always, in the shorter term, we're looking at the 21-day. In the longer term of the uptrend, we're looking at the 50-day. But just so you guys can get a context of kind of those points that we want to see either support if we pull back, and if we don't, then that's going to be a negative tick. And every single dip lower we break below these price levels comes more and more of a negative tick, makes me want to go more and more into cash. All right, let's look at the S&P. To be completely honest, other than it was 4 out of 5 days up in a row, very, very, very similar action. Take a look at the weekly. You can see again, breaking out to all-time highs, a lot of volume there. This, we didn't see as much sideways action. Seemed like a lot of stocks were rotating from the NASDAQ into this space. Still, needless to say, there was some chop going on here, but overall positive. And the last thing I'm going to look at is the Russell. And the reason I'm going to look at this, we'll zoom out a little bit, is we are trending very, very well with the Russell. These small caps are performing excellent. I'm sure if anybody's holding any small cap stocks, you're starting to see that in your in your portfolio, which is a good thing. And we're still not at 52-week highs, but we are trending upwards. So good to see this. Small caps doing well. All right, so let's jump over to Deepvue. And let us take a look at the theme tracker. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for the screening of my stocks, for managing all my stocks, watch lists, technical analysis, fundamental analysis. Pretty much everything I do is through this Deepvue application. Next level with the updates, more to come. If you're interested in it, for YouTube, I got the link in the description. For Twitter, I have a link in my bio. You can click there. Right now, they're on a wait list, so you can put your email in there and get notified when your opportunity comes up for you to sign up. Great, great application. And I also have a discount code in both those areas as well. All right, theme tracker. So we got today, which was Friday, 1 week, 1 month, and year to date. As you can see straight across the board, miners in general, really, really strongly performing in the short term and in the long term. Bitcoin miners in particular, though, really leading it out in the last month, becoming very, very clear that this is the leader right now, as we're seeing a ton of these stocks just keep ripping and ripping higher. Other than that, China stocks did very, very well this week. You can see that right here, China Internet. And you can also see that just growth, semis, a lot of those stocks that a lot of CANSLIM traders tend to, AI, quantum, that we've all probably been seeing come up on our screeners, doing very, very well. So very good to see that in terms of our trading strategy and our approach, to see the growth and the strength in those sectors. All right. So let's just talk about exposure levels before we start jumping into some stocks. One of the things I always say is people love to try to call the top, whether it's people you have in your daily life, at work, friends, things like that, whether it is on X or other social media platforms, YouTube, whatever it is. Everybody loves to try to call the top. Everybody loves to try to say, we can't go on much longer from here. Or my favorite comment is, this market makes no sense, right? The reality is nobody really truly knows what's going to happen. This uptrend can go on much, much longer, or completely collapse and roll over tomorrow, but none of us know. And yes, this has been a long-term uptrend, but that doesn't mean that it can't stop. So that is one of the ways I always approach the market. That is why I'm looking at this stuff every week, and I'm constantly adjusting how I'm approaching the market based on just the probability of the data that I am seeing. One thing to note, yes, this has been a long uptrend. We have gone sideways, like I was just showing before, for about a month. And that chop, that rotation, very, very healthy action for an overall uptrend. If we just keep going up and up and up and up and up, it's at some point going to have to correct. So the fact that we had that short term, I would say, month of sideways chop action that was going on was very positive for the overall uptrend. Distribution, yes, it is high, moderately high. Yes, we have seen a lot of stalling action in that choppy base as we were tending to go higher. But the stalling action to me isn't extremely concerning because of the fact that we've broke above those levels. So we've stalled, we've seen resistance, we broke that resistance, and we've gone higher and closed at all-time highs. So to me, the distribution isn't as concerning, considering that the price action is showing us that it shouldn't be. We just saw we had a high volume week closing at all-time highs. That to me is the most important. Even from a stock perspective, even if you're somebody that doesn't want to focus on what's going on within the stock market in terms of an overall market, S&P, NASDAQ, and you want to focus on what's going on with the stocks are breaking out. We're seeing some of these go on great, great runs. Granted, has not been an easy dollar market. It hasn't been the just buy anything, make money type of market that we all love to be in. Been a little bit more of a hard penny stock pickers market, but if you're focusing on the leaders and you're focusing on where that rotation of money was going and that strength was, you are seeing a lot of these names break out. A lot of the names we had talked about last week that some people were putting in here. Hey, what's going on, Chad? A lot of the names that we had talked about last week, a lot of the names that I think even Chad had brought up that's in the chat over on YouTube had actually made some pretty good significant moves. So in terms of where I'm at right now in this overall market exposure levels, this is easily a market you could be 100% invested. The only note I would add to that is, being that we've gone up 5 days in a row, being that we're starting to get a little bit extended from that 10-day simple moving average, a pullback, like we had said, is very likely. That pullback may stop you out of a new buy, right? You buy a new, maybe Monday morning, Monday afternoon, you buy a stock as it breaks out. Then we have a day or two where the market pulls back to the 10 to the 21 and you get stopped out of the stocks. Happens all the time. A little bit of extra risk when we start getting a little bit extended. So what I mean with that is, don't lose sight of that stock because you got stopped out, because there is that extra risk of how we're starting to get a little extended in the short term. Keep an eye on it. It's part of the game. And that stock might just pull back to a support level and re-break out and then go on a run. So keep that all in mind going into next week. But like I said, exposure level wise, this is 100% of market. I think you should be 100% invested. I've switched even more bullish, like I said, for the fact that we broke out to all-time highs on a weekly basis with a lot of volume. All right. So stocks. Chad, I see you. Appreciate you saying what's up. I know you had a stock that you wanted us to cover. So let's jump over to Deepvue. I didn't forget this week. Last couple of weeks, I forgot to make the switch over to this camera. All right. So Chad wanted to look at IonQ over here. IonQ falling into that quantum computer space like we had just talked about. This had a very strong week. A lot of these quantum names have been on my screeners for a while. A lot of them moving choppy and sideways. But looking at this one in particular, let's see. So most recent earnings, that's not positive, right? But I've seen a lot of these quantum stocks. The earnings haven't been as great. The sales have been a little bit better. So from a fundamental perspective, EPS ain't great. Sales are great. Not the greatest, but you can see the funds pouring into this. The ROE, not so great. And on an annual basis down here, again, sales really good. So this industry, like I said, this sector does seem like sales are more where we want to look, and the earnings are kind of lagging behind a lot of the price action. So I don't rule things out just because they have poor earnings. When everything else lines up perfectly, I still want to pay attention to a stock. So looking at this, we're on the weekly right now. You can see we had this big correction over here from peak to trough. We're looking at huge 60, actually more than a 60% correction over here. Market turned around. This turned around with it, which was positive. Started getting in that uptrend, and then we kind of went in this sideways action. So to dissect what's going on in here, let's take a look at the daily. Let's just sync that up nicely. All right, so here we have this kind of big base that formed right here, right? Then we have this space right here, and then this kind of little shakeout right here. So not textbook VCP pattern, right? Where it didn't really get super, actually, you know what? I'm sorry, I'm doing this on the fly, so I might, as I kind of analyze things might come out of my mouth and then I might correct myself. All right, so, and when I say VCP, for those who don't know, that's volatility contraction pattern. That's a Mark Minervini term. And what we want to see is just the volatility of that stock continue to tighten and And maybe it isn't as clean where it's like these, like 1, 2, 3, we got about 4, I would say, right? Big correction, second correction, third correction, maybe to here, and fourth pullback, and then ripped. So I would definitely say this is a lot of volatility contraction, especially when you start looking in here, right? The tightness that formed here. We bounced right through those moving averages. Tons of volume came out here. And I think even if you bought on this day, that was even okay. As we broke here, though, this would probably have been the real day to want to get in while we took those moving averages in the 9th and got higher. Now, Chad, the question that you said to me is there any more upside, right? Because we had, even just on Friday, an 18% move. And I would say 100%, right? We're still below all-time highs right here. We're approaching all-time highs. Now, do I think that there is actually, we're all-time closing highs. Let me just see for sure. High 54.74. High, actually, so no, we have broke to all-time highs right here. On a ton of volume. That tells me that the big money is going into this. They are not just buying here and then that's it. The RS line's turning up. Like, this is looking like it's starting what could be its next run. I love this setup here. I think if you own this, this was a great buy. Now, if you don't own this, what could very well happen is we could tighten up a little bit here and kind of flag out, and that could give a secondary entry from kind of buying out down here. So keep an eye on that. Be careful, though, buying right here if you don't own this, because you could get washed out if we do have that kind of flagging pattern right here. But no, I think this is a great trade, Chad. I think if you're in this right now, follow your rules. I know one of the CANSLIM rules is if you have a stock go up 20% or more in 3 weeks, you hold it for 8 weeks. And this is one that I would consider that rule to be worthy of using, especially with the quant stocks doing so good this week. So appreciate you sharing that. Jim over on X, TRIP. All right, let's bring that one up. TripAdvisors. All right. I always start off on the weekly. It gives me a little bit of the macro trend first. So for me, I don't like buying stocks that are so much overhead resistance, right? Though, depending on the setup, I could understand somebody else wanting to get in a little earlier, especially somebody who trains more of the Stan Weinstein kind of style, where you're just trying to start like in this 2A type of phase as things are starting to turn around. So I won't poo-poo this completely, and I know everybody does trade different. So, but from my perspective, this is a concern, just how much overhead resistance we have. From a fundamental perspective, earnings look good overall. Not the best last 3 quarters, but overall, I'd say this is okay. Sales are a little bit mediocre. Good ROE down here. Institutional sponsorship's kind of really been flat for the last couple of years. Subgroup doing good. And from a AS, which is same as IBD's relative strength perspective, on 12-month, mediocre, on a 3-month, okay, and on the last month, which isn't that too much of a concern, not that great. So from a fundamental perspective, and then we have annual down here, not something great. From a fundamental perspective, not the kind of stock that I like to play. From a technical perspective, the big concern to me is this big downturn. I'll jump over the daily just to see. I do see that you might possibly be looking at some sort of this gap up and then, maybe kind of flagging somewhere around here, maybe going to continue to tighten up, even shorter terms type stuff, right? It's tightening, riding those moving averages, 50, 10, 21, all converging right here. Could this be primed up for a nice big pop and a big move? Yeah, absolutely. So I definitely see that. The question I always say when I find a stock like this or somebody mentions a stock like this to me is this one of the best names that you have on your watch list, right? Or is it just a stock that you maybe have a emotional tie to for whatever reason, past trades or some reason? That's the question I always ask people. Is this the best setup that you have, or is this the best fundamental stock and the best setup that you have going into next week? And is this where you want to put your money? So that would be my big thing to mention, Jim. From a CANSLIM perspective, I would probably be waiting on something like this. From a Stan Weinstein perspective, I don't trade that much that style that much, so I don't want to comment too much. But from what I understand, this could possibly be a good setup there. From your kind of swing trade style, I could see the tightness there and the inside days and things like that. So just again, is this the best stock that you have on your watch list? Anybody else has anything, throw it in there. I'm going to bring up a couple names. Really, honestly, what I'm going to do is I'll just bring up my spotlight list from last week. I think one of the names that a lot of people have been talking about here is Palantir. We all know this fundamentally. The stock is very, very sound. It's a leader. It's gone on a big run. We're looking at this from a weekly perspective. This is a name that's been constantly talked about. So really, for this one, just to make it a little faster, let's deep dive. I talked about last week how we had this pullback here. We were kind of tightening in sideways action, all those moving averages converging. And then you can see we had these 2 days right here, 1 and 2. We got those high volume pops. We broke out of this sideways range. We retook those moving averages. So for people who had bought in here, I think this is looking like a great setup, right? We had a 4.3% move. Even if you had bought over here, there's likely you're somewhere up over like 5%. So getting some cushion, which is very, very positive, and having those moving averages is a good technical stop. So now, if you're somebody, especially if you're somebody from more of a traditional CANSLIM background that's looking at this, this is all positive constructive action. You can sit down, you can kind of wait and see if this can form a cup with handle, and really just sit back and wait on this one, but don't lose sight of it. So I think the swing trade entry is kind of passed. I think the bigger position trade, CANSLIM style trade is still there in the future. And who knows, we could get some more tight action in here for another swing trade. So this is one of those names that I'm always watching in a market like this. This has proven itself to be a leader. And yeah, I think everybody should be watching this. I do not own this stock, just so you guys know. This one, very, very tight action, strong fundamentals. Nothing too big that I want to really, really hone in on this, but you guys can see what's kind of on my watch list from last week. I still have to do this week, so keep that in mind. And then, Jim, you got another one. Thoughts on EME2? MCore. Take a sip of coffee while I look through this, dissect my thoughts. All right. Big uptrend. Love it. All right. See some base pattern. Very, very constructive, tight base pattern forming here. Very, very positive. Fundamentals. You guys could also just look at these fundamentals right here. You got, this is what I love about Deepvue. You got a fundamental rating, you got an EPS rating, you got a sales rating, accumulation distribution, stand-wide seed stages. This helps dissect things very, very easily. And then you got composite ratings, very similar to how IBD does it, looking at just the overall strength of a stock as a whole within these timeframes. So look, that should give you an answer right there. There's some strength in this stock, absolutely. This is a company, electrical, mechanical construction facilities building, U.S. Energy Solutions, fiber optics. I found that a lot of these construction plays are playing into the AI database kind of building out type of stuff as well. But yeah, the construction in general has been a very, very strong sector too. So that's good to see. Let's look at it on the daily. Very, very nice, clean pullback to that 21. Not a super deep correction, right? Let's measure this out. Yeah, not a super deep correction, which is definitely good to see. Only a 10% correction. I also want to see something too. Does this qualify technically? Whoop. I wonder if this qualifies as a, Jesus, I'm all over the place, sorry. That's what I did, hit the lock. Okay. Let's see what happened over 8 weeks, right? So we have peak 1, 2, 3, 4, 5, 6, 7, 8. All right. So yeah, it wasn't not really a power play setup having like a big move, but that's what I was just looking for. It's sometimes easier to measure than to guess. I'm not a quick number guy. But still, really, really tight pattern forming here. Nice base correction. You can see just riding those moving averages. So I really do like this setup. This is really, really nice. It's been going on nice sideways, but not too deep. If we're looking at levels, you can have a possible pull up to here, maybe get a little handle and a breakout, or even just a breakout to all-time high for the CANSLIM traders. For the swing traders, seems like if we look at the peak across here, right, this has been an area of resistance that we've reached, and then we've tightened up to it. So I think, plus, yeah, the moving average is very tight here. If we can break above this area again, I would say that would possibly be a good entry in my eyes. But yeah, I do like this setup, the stock, the industry it's playing in. Definitely one I think a lot of people should be watching. So good call, Jim. I like that one. Again, anybody else see a bunch of people in here? Don't hesitate. Throw any name you want to see in there. CCJ was also on my list. This is one that I had been watching. This is one of those kind of nuclear plays, uranium. They had this really nice double bottom. I had bought on the attempted breakout. I had kind of got stopped out of this one, kind of been watching it. It looked like it tried to re-break out again, pulled back again. It's kind of tightening up. The moving averages, again, converging, but this time in the proper order, 10, 21, 50. The pullback was on lower volume. The volume here was a little bit higher. The fundamentals on this one are great. I don't own this, and I am fully invested right now, but really do like this setup, like the fact that has tightened up to these moving averages, started to respect them in this pullback, hopefully. If you're not in it already, then I would just kind of see, can we get back up into these levels and hold? Or are we going to go a little more sideways before we break out? But overall, I like this. I think, again, just that double bottom re-breakout is where I would be watching. Hood, this was a stock that I had owned, got stopped out at the 21-day, a close below the 21-day. It has gone on a massive run since the market has turned around. It has corrected, broke below the 50, news that it was getting to the S&P, jumped up, and then now it's kind of been hovering right around those all-time high levels. So I would keep an eye on this one. What would be really, really nice is if we can get kind of like a high handle on this one. So, right, we broke right to that area. We squeaked above. We kept trying to get above, and we kind of rolled back down. If we can get some sort of a little handle in here, and then kind of break back out again. But I think right above this level, if we can get a move and a hold above there, definitely somewhere you can consider entering. Reddit, this one. So I own this stock, full disclosure. I bought as more of a swing trade way down in here. It has now broke out to all-time highs. It is staying above those all-time highs. It's within that 5% range of a cut breakout. Yeah, if this pulls back, this could also give you a high handle on here. But this is another one of the stocks that I could see this being a leader going into this maybe next bull run if we have another run from this sideways action that we've had. So, again, I do own this stock. I think, and I built a position that I'm comfortable with, so I'm not looking to add on to this anymore. But I think really above this prior high, anywhere in here, for the especially CANSLIM style trader, this is completely okay with entering. For a swing trader, you might be looking for a little bit more tighter of a stop, and then you might want to be patient and see if it gives it. All right. Other than that, I don't want to make this too long. I mean, there's a ton of stocks out there. We've kind of talked about a lot of these names. I'll bring this one up just because of the reaction that it had. This is the reality of the market, right? This is the reality of buying even a setup that looks perfect. Not every single one's going to work out. I'm sitting right now with about 40% winners, 60% losses for the year. Still doing very, very well for myself, beating the market, no problem. So, but this is what happens. You have this really, really nice base. You have an industry that was, the communications was doing very, very well. It broke out. It broke out on a ton of volume. It followed through even after that. Did kind of reverse a little bit, and then it got crushed on Friday, but held above that 21-day. So good chance you may have sold if you had got a cushion and retraced to a point where you were break even, got stopped out. I don't think this is one to forget about. This is just the reality of what it's like trading stocks. There's going to be stocks that act like this, that break out, squat, come back in, and then break out again. So just like to show that for the sake of showing all different sides, not just the ones that rip. All right. Give everybody one more second. Take a sip of coffee and then we'll on this if nobody has anything else. All right. Let's finish this off. So my final thoughts going into next week. As I always say, block out the noise, block out the news, block out everybody trying to make predictions because nobody really truly knows what is going on. What we look at every single week, in my eyes, the price action, what stocks are doing, that's the most important. That's going to lead you to real information you can make decisions on, probabilities that you can put in your favor, give you that edge so you can make some money in the market. But again, the truth is, all we're simply here to do is to ride this wave and to manage risk with whatever the market gives us. This market could keep going for a couple more months. It could be a month. It could turn around tomorrow, and this may be the top, but nobody truly knows. We're just going to keep riding the wave until it fizzles out, and then we'll step off. And the good thing about this is when this trend ends, we may not catch the very, very top, but we will step aside before things get too ugly. And we'll go to cash, and you'll protect a lot of those profits that you've made since this market has turned around. You'll put that cash aside, and if you're a shorter person, you might have some short plays. You can continue to make money, and when the market gives us a signal, we'll be ready to test the market, see if it's going to be a longer-term uptrend, and if it is, we'll be in there, and we'll do what we did in this one, and we'll keep riding it up. So don't try to predict. Just keep riding this wave until the market tells us otherwise. Reminder, just do your work on the weekend, screen for stocks, don't be lazy. Any week you could find the next big leader in the market. And if you're not doing the work and you're not screening for stocks, you're not going to find it. So do the work, build plans for any potential buys. I'm fully invested right now. I'm still looking at potential other stocks just in case I get stopped out or something looks better, and building plans for those so that I can make decisions during the week. And build a plan for your portfolio as well. Every single week, I reassess what my stocks are doing. I have my plans every single night. I reassess those plans and make sure, where can I make adjustments? Do I have a sound plan? Where are my stops? Where am I profit taking? All that stuff. You're going to be doing that consistently to manage the risk in your portfolio if you want to make money. But overall, I say this all the time. Some of you might not know. I say no OMDs, Oscar Mike Deltas, no OMDs, which I say no open market decisions. You want to remove the emotion within the intraday chaos. We've seen it so much within this market. Big downs in the beginning, big ups in the beginning, and then completely reversing the opposite direction. I've got hit with it where I get a stock that breaks a moving average, like a 21-day EMA. My stop was to close. I was getting stopped out. So I had to wait till the end of the day to kind of figure out. And I pulled the trigger too early. Stock reverses, closes above the 21, and then continues on a run. So there's a reason why we make these plans, and we need to stick to these plans and have discipline. Just make sure that you're making all these plans when the market is closed. So again, you just don't get caught up in the intraday chaos and make some stupid decisions like we all do, because I've done it. All right. That is all we got for this week. Everybody on YouTube, appreciate you guys. Everybody on X, appreciate you guys. I'm looking over here, like you guys know, I'm looking at the screens because I can see you're right, but over here. YouTube, you got the X profile up there if you're not following me there. X profile, you can also watch this on YouTube, and I post the replays over there for easy following. You can look at some of the old ones too if you want to check those out. If you're not like Chad, who I appreciate commenting over here, and anybody else who's watching from Discord, and you're looking to join the Discord, I think we just hit 1,100 people, or we're like teetering around 1,100 people in the Discord channel. So YouTube, you got a link in description. X, I don't have a link there. You could probably find it through my comments, but the easiest thing is to just shoot me with a message, and I'll send you the link for that. Other than that, that's all I got. Stay disciplined.